Hey, welcome everybody. Let's go ahead and get started. We're very, very excited and grateful for Ben Davis and Ethan with Lendio for being with us today. Lendio is doing phenomenal work helping thousands and thousands of small businesses participate in the Paycheck Protection Loan Program. And so they've got great expertise. They've been working quite literally around the clock for the past couple of weeks to do everything they can as an organization, as a company, to help plug and support companies during this time. And so Ben and Ethan, we're very grateful for you for being with us, forgoing work and sleep and food and time with family and everything else you've been sacrificing over the past couple of weeks. We recognize that you are making an investment in spending time with our companies today. And so thank you very much for being with us. Just at the top, what I thought I could do is provide a little bit of context on the stimulus package, what we're seeing in our role as part of the governor's task force focused on federal issues and helping as many companies as possible benefit from these federal programs and resources, as well as share a little bit about what World Trade Center Utah is doing at this time and how we can plug in with our core programs and services and help your business. At which point we'll kick it over to Ben and Ethan, and they're going to give us an overview of what Lendio does, talk about what they're seeing as they're working with thousands of companies who are going through this process. And then you'll see in the chat function there, please, at any point, start typing out your questions there. Hannah does phenomenal work pulling these webinars together. She will monitor those questions, and at the end, we'll make sure we reserve time for you to get answers to your questions. So first off, we all have heard about the CARES Act. We all know about the $2 trillion price tag. At this point, thousands of Utah businesses have applied for and are receiving funding through the Paycheck Protection Program. My assumption is that everybody who's dialed in today is familiar with the general contours of that program. Let me just reiterate a couple very important things. One, we are seeing news reports about funding getting low for the Paycheck Protection Program. Originally, Congress authorized $349 billion. Not surprisingly, given how important this program is. And just like here in Utah, we want every small business that's eligible to apply and benefit from the program. The same is true across the country. And so the funding has gone relatively quickly, just in a couple of weeks. As of last week, there was strong agreement in Senate, bipartisan agreement to authorize more funding. They ran into some obstacles in the House. The sense that we had working with our congressional delegation in Washington, D.C. is that there wasn't a question that more funding would be needed and that there would be bipartisan support for more funding. But there was a desire in the House among some members of Congress and the leadership in the House to try to get some additional concessions and work on some additional issues on top of getting more funding for these programs. The feeling a week ago was, well, we've still got money, so let's try to play politics and get things done. We're at the point now where Congress needs to act. And our expectation, our hope, is that Congress will act to get additional funding authorized so that the companies here in Utah that have not yet applied will be able to do so and get their funding. In the meantime, banks are still taking applications, and so we encourage everybody to use what you're learning in this webinar. I'll talk about in a minute a couple of resources that you have available to get answers to your questions, but get your applications in as soon as possible if you are eligible for the Paycheck Protection Program. One other element of the CARES Act that I want to make sure I just put on everybody's radar, we will be doing webinars over the next week or so to provide more detail and expertise on this topic. But the CARES Act included many tax adjustments designed to help companies get cash now and also to save cash that you will need to pay in payroll taxes down the road. Very quickly, there were changes on how you can calculate and carry forward not net operating losses. Those changes go back to January 1st, 2018, which means as you work with your tax, your CPA, your accountant, take a look at your taxes in 2018, 2019, look at the new changes on how you can carry forward past losses, thanks to the CARES Act, as well as adjustments and easements on how you can write off entirely any qualified improvements, so interior improvements to buildings or facilities that you may have. As well as changes in payroll taxes and the opportunity to defer that. So you can go back and amend your 2018 and your 2019 taxes. As soon as the IRS can process that, you can get some additional refund back inject some additional cash into your business. And at the same time, you can defer paying payroll tax, at least a 6.2% Social Security you'd pay on top of your payroll until 2021 and 2022, 50% in both years. And so when you go to file work on your taxes the second quarter, that's going to be a way to save some additional cash. So definitely talk to whoever does your taxes and dig into those, because that's a great resource that we haven't been talking enough about here in the state of Utah, but expect to hear more from us soon. Before passing it over to Ben and Ethan, I mentioned World Trade Center Utah. We exist to help companies increase their sales internationally, to attract foreign investment, and also to troubleshoot problems. And so we're recalibrating our program to support companies. So if your company does anything internationally, if you're running into challenges, maybe you've got a manufacturer, supplier, they've been knocked offline, your distributor's gone MIA, and you need to find a new distributor, or you've got a product or a service that is in demand right now in this COVID-19 crisis that we're in, you reach out to us. We can connect you with just about anybody you need to connect with in any country. We run grant programs where you can get $2,000, $3,000, $4,000, $5,000, $6,000 to help offset the costs of your international business, and that's important right now. And we also can do free market research and consultations. Go to WTCUtah.com to get more information. And then finally, we're going to answer a lot of questions, get a lot of great information from Ben and Ethan today, but we're also not going to cover everything. So please write down this website, coronavirus.utah.gov/business. There's a federal resource link there, and you'll find very, very detailed information, but also distilled down to the key nuggets that you need on everything we're going to be talking about today, other programs that may be applicable to your business, as well as a link to request assistance from our rapid response team. Thanks to volunteers from about 15 different organizations, we have 50 people trained up, ready to answer your questions, ready to help solve problems and provide solutions to the challenges you're facing as you engage in these federal programs. They're on the website. You click the link, you fill out some information, and then you can go ahead and get connected with a member of the team. They'll follow up and they'll engage to help walk you through this process. So without further ado, I go ahead, very grateful for Ben and Ethan for being with us. You know, Ben Davis is Lendio's Chief Revenue Officer. Prior to his role as Chief Revenue Officer, Ben worked as the Chief Franchising Officer. Under his leadership, Lendio became the world's first franchised online lending marketplace. In his current role, Ben leads all revenue functions in both sales and franchising. Ben believes that empowering small business ownership should be a cornerstone of any collective effort to strengthen individuals, families, communities, and countries. He lives for long winters full of snowmobiling with his wife and 3 kids. And Ben, I love the wintertime too, but I'm ready for the temperatures to get a little bit warmer. It's been too cold for me over the past couple of weeks. Ethan is the general counsel. I don't have Ethan's bio with me, but let me tell you that Ethan is a phenomenal, incredible person, and we're grateful for Ethan for taking time out of his day to be with us. So Ben and Ethan, with that introduction, I'll pass it over to you. You can take it from here, and then we'll jump into questions at the end.
Great. Thanks a lot, Miles. Thanks for pulling this together and inviting us. I'll start off. Ethan is a really great guy. I just want to be clear. We don't have Ethan here just because we feel it's important to have general counsel around every time I'm speaking. It's not a watchdog situation. Ethan has kind of been at the core of this. You'll notice that we're not very socially distanced right now. It's because we determined a little while ago we are living with each other at the office right now more than we're at home. And so we think we're probably less at risk of passing, or more at risk of passing stuff to our families than we are to each other, because if one of us has it, we both have it. So Ethan has kind of been in the trenches representing small business owners to some of the industry advocacy groups and small business groups. He spends a lot of time on calls with the SBA and other organizations that are involved in this program. And so and we're both extremely sleep deprived, so we figure if we're both here, there's at least a half a brain answering your questions. I mean, half a brain combined, because we're at least at quarter capacity right now, right? Yes. So I'm grateful to Ethan for taking time to spend with us. In the interest of doing right by Ethan, I will start with all the disclosures that we are not your attorney, we are not your accountant, we're not your business consultant. We can't even make the decision as to whether or not you could or should apply for PPP funding. But we are heavily engaged in this whole thing and very, very interested in helping all small business owners, and as a Utah-based company, of course, especially interested in helping Utah-based companies. So we're happy to take the time. Did I miss any important disclosures there? Okay, I got the thumbs up there. So let me just start, just to give you some context of where we'll be answering these questions that you have from. I'll give you a little bit of context about what Lendio does. So Lendio has been around as an online marketplace for small business lending for about 7 years. If you think about like Expedia or Yelp or other online marketplaces like that, that's what Lendio is for small business lending. So small business owners come to lendio.com. We have lenders from every type of product that is out there for small businesses, from SBA loans to commercial real estate loans to invoice factoring to asset-based equipment loans, working capital loans, term loans, lines of credit, all of those. We have the top lenders in each one of those kind of loan categories. And we have a team of a few hundred funding managers that help small business owners identify what the best product and best options are for them, given whatever is in front of them at the time in the growth phase of their business. And so that's what Lendio did. We are still doing that. But a few weeks ago, we had this decision to make as to whether or not to pivot the company and go all in and try and help as many small business owners get access to this PPP capital. And we elected to do that. We've hired, I think, as of today, about 170 new people that are helping just exclusively with the rollout of this PPP program. I'll give a little bit more context on that, just again, from the point of view of trying to help people understand what's going on with the PPP program right now. We recognized early on in this process that for a lot of small business owners, there was a risk that they might get left out of the PPP program. We did some early math and said, okay, if based on what we know about how many small business owners there are and what the average payroll of each small business is and how many employees the small businesses in America actually hire and what the average annual salary of the employees of those small businesses are. We did some math early on and determined that certainly the initial $350 billion, while a nice out of the gate allocation, that just that amount would leave a lot of small businesses out in the cold when it comes to this program. And so we felt like there was going to be a significant underserved population amongst small business owners that just happen to not have a relationship with an SBA funding bank, an SBA licensed bank. And that happens to be the case for a very, very significant portion of small business owners. And it's no fault of their own. Of course, it may have been the bank that their grandma, when she started the restaurant that they now own and run, that their grandma banked with that local bank, 50 years ago when she started the business, and they're still banking with that local bank, and that local bank doesn't happen to be an SBA licensed lender. And so we anticipated that a lot of this initial round of funds might be eaten up by just those banks that had existing relationships with small business owners, and especially if they had a an outstanding line of credit or an outstanding loan with that bank, that those might get preferential treatment. And so our focus was, how do we make sure that we go out and find every source of capital, every possible source of capital, that we can give access, help get access to the PPP funding, for those small business owners that don't have a relationship with a bank that can do that. So that's kind of been our focus. So far, we have done, our banks are still reporting to us, the lenders that we've been able to get on board and make commitments to fund the small business owners outside of their core base of customers. They're, as of 2 o'clock this morning, they were still getting approvals. I think, I don't have the numbers, but out of this first 350 billion, Lendio is probably, we were probably able to help small business owners get access to maybe 3.5 billion of that, where they have approvals, meaning they have an SBA number. So the SBA, it's gone through their system and they have a number that says, hey, this capital has been reserved, or this money has been reserved for your PPP loan. We're pretty proud of that number. It was a ton of work to do that. One of the big questions that I think everyone has right now is, one of the questions that was already asked is, New York Times is just now reporting the PPP program is out of money. We started getting signals at about 10 o'clock last night that it was very, very close to being out of funding. Like I said, the lenders on our platform that we're funding these loans, or I shouldn't say funding, that we're getting SBA approvals for these loans. We're still getting approvals around 2 o'clock in the morning. But the SBA, even on their website, just a couple minutes ago, actually, while we were on this call, posted the notification that there has been a lapse in appropriations for this. And so the initial 350 billion is gone. Or at least has been, had placeholders put on it so that it would be gone. So we would tell you, don't despair, don't lose hope. If you look online and some of the early commitments from the SBA and certainly from Secretary Mnuchin of the Treasury, they're very clear. Mnuchin has said multiple times, listen, we won't let this run out of money. Obviously, he doesn't control Congress. But I think there are a lot of really important efforts going on right now to make sure that next round of funding is made available for this program. We would encourage everyone on this call and everyone that you know and everyone that they know to get involved in helping to push that along and help free up some of this gridlock that has kind of the political wrangling that has delayed this next round of funding. We are highly confident that next round will come, simply because there have been so many commitments from the current administration and from Secretary Mnuchin saying that it won't, and because it's the right thing to do for small business owners. So if you're looking for how to get involved with that, I'm sure Miles has some recommendations. If you go to lendio.com right now, you can see we have a couple different options. We, late last night, started a petition that seems to be snowballing really quickly and getting a lot of signatures on it. There are some other, there's other ways that you can contact your federally elected representatives. We're encouraging people to use the tool, the ResistBot tool that automates communications to the offices of your federally elected representation. So we would strongly encourage everybody to get involved and help Congress understand how important this is to small business America and how not just important the funding is, but the timing of it. I've spent my entire career facilitating small businesses, and I know how razor thin the margins can be sometimes and how difficult it can be to make ends meet. And so please get involved and help send that message that it's time to fund the second tranche and make good on the commitments that they've given. One of the questions, so that's one thing you can do right now. The next thing you can do, if you have not already applied, just because this initial tranche of funding has run out, we strongly recommend that you still apply. The SBA by law can't approve any of these loans until additional funds are appropriated, but we would still strongly recommend that you apply. And we would also recommend that you apply in multiple places. If you have a relationship with a bank that is funding or has been participating in the PPP program, we strongly recommend that you apply through that bank. We also think it would be a good idea to apply through Lendio or another marketplace or some other place where the advantage of going through a marketplace is we're able to look at multiple lenders. Like we have one lender that'll just do medical PPP funding, right? So we're able to look at different lenders and try and match your application to those lenders. I will tell you, we have not by any stretch of the imagination been able to get funding for everyone that applied through lendio.com. We're really proud of it'll probably be a little over 30,000 small business owners that we were able to get funding for or get approvals for funding for. But we have probably 140,000 applications. And so no one should be under the impression that if they just submit an application that somehow that is guaranteed their access to that funding. Because like we said, we think it's probably in order to fund all the small business owners that might qualify for this, it could be around 1.2 trillion that would be required. And so far we've got 350 billion. So we would recommend that you apply in multiple locations. There's no downside other than it can create some top of funnel congestion for the program. There's no downside to applying. That's been a really commonly asked question. Can you apply in multiple places? It's very similar to like if you go get a mortgage or an auto loan. You may fill out applications at 7 different mortgage lenders, but you're only going to sign the actual home purchase agreement and the mortgage agreement with one of them, right? You may sign 7 applications, but you're only going to sign one agreement, and that's the same thing with these SBA loans. There was some early confusion about that. There was an attestation in the original application that you had to say, no, I haven't applied anywhere else. They removed that, and they've just you're required to attest that you're not receiving funds from multiple locations for the same business. So by all means apply. The first lender that lets you know that they have an SBA number for you when the fund is replenished, that would be the one that if it was me, I would go. Okay, I think those are some of the things that we felt like it was important to talk about. Now, I know there are a lot of people on this call that have specific questions about 1099 issues. How do they apply? Ethan, do you want to give an overview of kind of when, just the basics around the 1099 applicants, when they became available and where we're at?
Yeah, so the SBA split it up into 2 different groups, and they said general small businesses could apply starting back on April 3rd, and then last Friday they opened it up to the rest of the applicants. So 1099 contractors, self-employed individuals could all start applying back on last Friday on the 10th. One of the features of the act is that all sole proprietors, 1099 contractors and self-employed are eligible for these loans. They have to have been in operation as of February 15th of this year. They have to have self-employment income. Principal place of residence has to be in the United States. And the other day they came out with what the SBA and the Treasury are calling interim final rules. They issued 3 of them, and this last one was touched on the self-employed individuals, and they stated that they have to have a 2019 Form 1040 Schedule C along with their application, and they use that to prove the income that you've made as a self-employed individual. And then they have to certify also that the current economic uncertainty makes the loan necessary to continue their operations. And so right now, you know, we know, like Ben talked about, right, the funds have been depleted. And so right now, what everybody probably should be doing is, if you haven't applied already, is get all those documents together, get the application completed, get your 2019 Form 1040 Schedule C completed. They did state that if you haven't filed your 2019 taxes, they still want you to complete the form, calculate what your net income would be, and you don't have to file it. It's not due until July 15th, I believe, is the extension for everybody. But you still have to have that ready for your PPP loan application. And that's all true if you don't have any employees. If you have employees, you need all that information plus your payroll documentation, your Form 941s for 2019. They will accept some form of bank statements as well to prove that you've paid what you've paid to your employees. And that's how they calculate the loan amount, is based on those expenses. The other distinction they made on the rule from the other day, a lot of partnerships or LLCs with 2 or 3 owners are thinking that they can apply separately as partners or as members of the LLC. But they're saying, no, the LLC or the partnership has to apply as the business entity. Each individual partner doesn't apply for their own loan. So that was another clarification that they came out with 2 days ago on for the self-employed individuals.
There are some things that obviously there are some questions that you'll ask that we don't have answers to. Part of that is because, as Ethan said, they continue to issue additional, what they call interim final guidance, which I'm pretty sure only a government entity can come up with the term interim final. But they continue to issue that. Like, there's a gap right now. If you started your business before February 15th, but after the end of 2019, they don't have particular guidance yet, do they, on someone that is?
No, in that interim final rule, they did state that they will issue additional guidance for those that weren't in operation in 2019, but had operations from January 1st through February 14th of 2020. They're, like I said earlier, they're requiring this Schedule C for 2019, and they're stating that they're doing that because they don't think that there's any reliable documentation that they've identified at this point for the sole proprietor or self-employed individual. The other thing is, you know, as a 1099, one of the questions that came up was whether we'd have to supply the 1099 miscellaneous forms, and that's true as well. Those forms, get all those forms that you've received, get it all ready, and make sure you have all your documents together. The key is getting everything, your completed application, that we're calling it, right, with the application document plus all the supporting documents put together, so that when it's submitted, the lender is ready to actually send it to the SBA for final approval. And so make sure you have all of those forms. You may need to get with your CPA to get some of that information. So that's some homework for everybody to go through. Sorry, go ahead.
No, I'm just reading through some of the questions that are coming to you. Should we talk about forgiveness? Do you want to jump to that?
So really quick before we jump into that, though, so we calculate that amount, the net income and the amounts you pay your employees. That amount is added up, divided by 12 to give us an average monthly cost, and then we take that times 2.5 to get the loan amount. There's some other calculations that can be factored in if you received an economic injury disaster loan from January 31st through April 3rd as well, but those are probably pretty fringe cases, I imagine. I know a lot of people apply for EIDL loans, but I don't know that anybody received them.
That'd be fascinating. If there's anyone on this call that applied for and has received an EIDL loan, we'd love to see you chime in the chat tool. It'd be interesting to know. I don't think we are personally familiar with anyone that has done that, but we'd sure love to hear good news that some have. So chime in there.
So we take that amount, that's the loan amount that can be approved. And then once a loan is funded, the business has, from that date, once you receive funds, you have an 8-week period to spend the money. And the amounts of the loan that are spent on payroll costs, mortgage interest, some special rules about mortgage interest. I don't think we have time to get into all the details on that, but mortgage interest, rent, and utility payments, the amount you spend on those items will be forgiven. The other key that they released in the interim final rule a couple of weeks ago is that 75% of that amount needs to be spent on payroll costs. Right. The purpose of this entire program is to continue to be able to pay employees to get money in the hands of people. So there's the rule is that 75% of that amount has to be paid for payroll costs, and that includes you as an owner. Again, you take that Schedule C amount, and that'll be factored in, and you have to. They basically cap that at an 8-week amount. So whatever it was last year divided by 12 or divided by 52 times 8 is the total amount that you as an owner would be able to receive.
There were some additional questions about the EIDL loan. So the EIDL loan was the $10,000 up to $10,000 emergency loan that to one of the participants' questions is only available if applying through the SBA. We've heard of some organizations out there that are helping people submit their EIDL loan applications. Lendio, someone asked if Lendio can help with those. Because that's a direct to the SBA program, and the SBA has provided the portal and the ability for people to apply for that directly with the SBA. We elected not to provide the application process through there because it's already set up and done, and it's being funded directly from the Treasury, not through lenders. So if you haven't applied for that, certainly look into doing that. It's up to $10,000. Someone commented that someone that they are aware of got a $500,000 loan. That would have to have been a PPP loan, not an EIDL loan.
Yeah, like Ben said, right, the EIDL loan program is directly through the SBA. They also have on their site the advance. There was, I think it was, I can't remember the amount, $10 or $50 billion allocated for the $10,000 advances under the EIDL program, but that has been depleted as well. So the advance amounts are no longer being granted. They'll still grant the EIDL loan itself. Those are two different things. There were additional questions about forgiveness. So we talked about the use of the funds. You have to spend it on those items that we talked about: payroll, rent, mortgage interest, utility payments. And then at the end of the loan term, when you go to get when you apply for forgiveness, you have to supply those documents showing your rent, that you had a lease in place prior to February 15th, that you had utilities in place prior to February 15th, and you'll have to show that you basically have to provide those bills to show that you paid them. And then again, they're requiring the Schedule C and the 941 forms for payroll taxes when you go to apply for forgiveness on the PPP loan.
All right, what other questions do we need to answer?
Thank you guys very much for that overview. Key takeaways for me are: one, for everybody out there, and assuming you haven't applied yet, and I know a lot of questions are people who have applied, but if you haven't yet, number one, confirm you're eligible. If you're a small business with less than 500 employees, almost certainly you're eligible. And confirm that. Number two, get your documents together. get all that material together, ready to go. 3, apply. Even as we wait for Congress to act, make sure you get your application in now. Again, Lendio as a tremendous service on the coronavirus.utah.gov/business website. We have a list of all the lenders in the state that are participating in the program, and there are many. Reach out to the Rapid Response Team if you are having trouble finding one that will take a new customer, or perhaps some of the banks or lenders stop accepting applications while we wait for Congress. The Rapid Response Team is there to help direct you to the lenders that are still accepting applications. And then one thing I would add is a fourth thing is to look at the coronavirus.utah.gov website, to look at all the different federal, state, and local resources that exist to help companies right now. There's obviously a lag in PPP, even for those who have their applications in. While we wait for Congress, that's going to create more of a bottleneck, more of a delay, and that puts increased premium on the importance of these other state and local resources and other federal resources that exist to help companies. And so don't just wait for your PPP, but move full steam ahead to doing some due diligence, exploring those other resources, and then engaging with them. And so, Hannah, I know that you've been getting questions both on the chat function as well as through your email. So why don't you go ahead, and Ben and Ethan have talked through a couple of them, but if you could go ahead and moderate a discussion, I think it'd be helpful to dig into a few more details of the questions people have.
For sure. So someone asked if they're a sole proprietor with employees, they've applied for the PPP loans for employees and an SBA for an EIDL loan. They're not sure how to apply for PPP or unemployment for themselves, though, because they applied for those loans for those employees. What's their next move?
Yeah, so it's an interesting question, and a lot of it depends. That's the classic answer, how we start answers as attorneys, right? It depends. But if they applied under, they're going to look at the tax identification number. And so if they apply for a PPP under an EIN for their business, and they go to apply for another PPP with that same EIN, it will get denied. That's how the SBA is distinguishing who already has a loan. And so I think in that case, they would apply under their Social Security number as an individual. If they already applied, depending on how they're structured as a business, if they already applied with their Social Security number, then an additional loan would be denied as well. If it hasn't been finalized, they should be able to update that loan request to include their amount of income from that Schedule C that I talked about. And I think it's line 31 is what the guidance is saying to go to. That's where your net income is on that form. Well,
Up to
and that's up to $100,000. There's a cap. They cap the compensation at $100,000. They thought that was an appropriate number to cap it at. So any amount above that has to be excluded.
per employee.
That's per employee or per self-employed individual. And I want to be clear, there were a couple of questions in here asking, well, what if you don't have payroll? What if you don't have any employees? You can apply as an individual. If you're a sole proprietor, if you're self-employed, if you're a 1099, you don't pay anybody else, you just have income coming to you, business expenses going out, you can apply, you can be approved. They're going to require those documents that I talked about. That Schedule C is your personal return. The 1040 is an individual return, and they're going to look at Schedule C from that return, that tax return. So apply as a sole proprietor. Apply if you don't have employees with that information. One other quick thing that we saw, one question was, who do we go to in the government to encourage them to continue funding? Ben talked about going to the lendio.com site. We have a couple of resources up. It's Congress. It's contacting your local representative, your local senator, telling them that they need to get together. Last week, I think Miles, you mentioned this at the beginning, right? Last week, they were all on board. Everyone thought it was going to happen. They were going to increase the funding, and then it fell apart. We expect that the things we're hearing from our side is that we suspect that will be approved early next week, but we'll see. Congress is Congress, and so that's up in the air.
Great. Next question. What about a consultant who loses part of income but not all and has to reduce payments to consultants but not cut them off completely?
So it's the same thing. They're still going to put all their information together. They can, based on what I understand, we're saying that their amounts they're receiving is going down, so they can't pay employees or whoever else they're using. They can still apply for a loan and they can still get forgiveness, but the case is that they haven't addressed this specifically, but the way they've addressed it in other scenarios with employees is basically they're going to have to show that they continue to pay. But you don't include the independent contractors that you pay in your loan amount calculations. So if you're an independent contractor and you have other independent contractors that are working for your business, that's not payroll. They apply for their own PPP loan. So they would go.
Ethan, I just want to make sure we emphasize that for 1099s and sole proprietors on the call today. So when you are looking at your application, you're looking solely as a 1099. If you're paying 1099s, they do it on their own. If you've got anybody on a W-2 with a small business, then they're included in your payroll. But then for yourself, it's net profits. And so for a small business, and this, Ethan, you mentioned this, and Ben, you did as well, but just to reemphasize, you're looking at your net profits, and that then becomes that 2.5 times your average monthly net profits over the past year becomes the amount that you're eligible for. You then can use that to pay yourself over 8 weeks, as well as to cover, rent, mortgage, interest, utilities, other things, so you can get the loan forgiven. And so with that question right there, if you're a consultant and you've got other consultants, presumably those consultants are 1099s, encourage all of them to go out and apply on their own, even as you go out and you apply for your own PPP loan.
Great. Next question. For owners, does compensation paid in dividends count towards payroll for owners?
So they didn't address it. I know this is a big question that a lot of owners are facing. They haven't clarified that. I think what you probably need to do is get with your CPA or whoever you use for your taxes and have a discussion about that. And I again, I'm not a tax attorney, right? We're not offering tax advice, but if it shows up on that Schedule C, you're going to use it. There's, if you have an S corp, you should be paying yourself a reasonable salary, and then you take the rest of it as a distribution from the company. And so that reasonable salary is in your payroll expenses. So that would be included, and then whatever else shows up on your Schedule C should also be included. But again, like Ben mentioned earlier, there's that $100,000 cap. Anything above $100,000 you wouldn't include. So be careful of that.
And Ethan, just to draw one nuance that may be helpful, with the $100,000 cap, that is in cash compensation,
right,
but non-cash. And so if you're taking a look either as a small business owner, your employees, or yourself, or as a 1099, that $100,000 is capped for the cash. But if you've got a medical plan and medical benefits or other non-cash benefits, include those costs because they continue to be eligible above and beyond that $100,000 cap.
Absolutely. That's a really good distinction, Miles. And then, so we take that amount gets divided by 12 times, and then times 2.5. That's the loan amount. There's a question about whether we just throw the $100,000 on as your loan amount. They're not giving you a year's worth of salary. They're trying to just give you.
So you take that, divide it by 12 times 2.5. That's what you would put as your loan.
Yep. And make sure, just not to harp on this, but we've had, through the rapid response team at this point, we've helped about 1,500 Utah small businesses. And we've gotten a surprising number of reports of businesses who go to their lender, and the lender says, no, the lender has done two things. One, on the $100,000, they haven't allowed the businesses to include non-cash compensation. And in addition to that, as you calculate your payroll cost, some lenders have been saying, no, it's only cash payroll, times that by 2.5. whereas cash and non-cash. And so we've seen some companies get a response back from the lender with a loan that maybe is 85% of what they're really eligible for. And so we've been working through with the lenders to try to push information out and make sure that they know how to calculate these things. Well, at the same time, we want to make sure that all of you, any business who's going through the process, goes in with a clear understanding of what is included in payroll. So if then the bank comes back and says, no, it's cash, not non-cash, the company can say, no, here's how you calculate payroll, because we want to help companies get everything that they're eligible for.
Yeah.
Go
ahead.
Sorry. With the $100,000 cap, is that per business? Like if you own a few different businesses, is it cumulative or is it per business? And if your net profits are greater than 100,000, is the amount you put on the loan form just an average monthly payroll?
So as far as multiple businesses, it depends on, a lot of people define that differently, right? So it's going to depend whether we have an actual separate business entity, each
with its own EIN.
Right. Each business can apply. If you're an individual and you're applying as a sole proprietor and you have different, business activities, and in your mind you have them separated out. But from a PPP loan perspective, those are all going to be lumped together. The other important thing is if you own multiple businesses, the 500 employee limit comes into play, because you have to count all of those businesses to calculate the 500 employees. So if you have one business with 10 employees, but another business with 500, you technically have a total of 510 employees. And so you'll trip that issue. The affiliation rules is what it's called. And so you have to, because there's common ownership, you have to count them all. But so if they're separate, distinct businesses, you apply for each business as a separate loan. But the sole proprietor most likely just has different activities that they do, and they need to lump those all together. Those would all be lumped into their own Schedule C. There's some questions about K1s. You would use a K1 as well as a member of an LLC that's receiving one, or as a partner in a partnership.
Great. And there's been a few questions about, instead of Schedule C, the K1.
Yeah.
Can you guys speak on that? Like what it...
Yeah,
yeah.
So that amount would be, they didn't come out and specifically say to use that, but there's no other way to prove what you've earned off of that business other than using your K1.
And I'm fairly confident, because this question came up yesterday, that we have had sole props apply with a K1 and got their SBA funding number. I'm pretty sure we have evidence that will pass.
And a couple questions about the next round of fundings, assuming it gets passed. Where would they get the application form? Do you guys think it's going to be the same as the first round? And then in order to kind of push that funding, should people be talking to Congress, or whom should they be reaching out to encourage that?
Yes, they should be talking to their local representatives, their senators, anybody. I mean, if they know other representatives in other districts where they don't live, contact everybody that they can in Congress.
As we mentioned before, on lendio.com, we have a few, like a petition, a link to ResistBot that just makes it easy. You can, from your phone, using a text messaging tool, essentially just contact all of your federally elected officials. But yes, please get involved with that. We really want to help more businesses get access to this capital. So please get involved with that.
The application, I don't foresee there being any changes to the application form that the SBA put out. They released multiple versions, and they finalized it on April 2nd, and they haven't made updates to it since. So I don't anticipate them changing that form. You can find that on sba.gov. They have it there. They also have it on the Treasury website, treasury.gov. You can find it. At Lendio, we created an online version of it that walks people through and asks them all the questions. but I don't anticipate the application change.
Can I go back to some, Miles, that you were talking about with the lenders? I do think it's important, as Miles pointed out, make sure that you know your own calculations. Get with whoever, whatever accounting resource that you have, know your own calculations, because it's kind of important to understand right now, lenders are submitting the basic information that they need to have, or they have been, and I can tell you they will again when additional funds are appropriated. They're submitting the basic information to the SBA's E-Trans system to get that placeholder number. It's called a PLP number. That placeholder number that says, you know, the 24,000 for this business has been allocated. But then there's still additional work that has to be done by the lender, either before or after. Many of them have been kind of in this rush to get these placeholders for their borrowers. So they'll probably do it afterwards, where they go through and say, okay, now we have to go in, we have to do their regulations that these lenders are subject to, called Know Your Business, Know Your Customer, anti-money laundering checks. And they have to go through and look at those calculations and say, okay, this is, you know, they applied for this, and we think, yeah, the documentation that they have justifies that. So be in control of your own destiny on this one. Know that lenders are sometimes, right now, again, because they are all moving as quickly as they can, they're applying really broad rules to some of this stuff. And so they may just say, hey, for safety's sake, we're not going above this amount or something like that. Be informed as you possibly can, to be able to advocate for yourself and your business.
Thanks, Ben. That's an important point to underline. And Hannah, if I may, I've seen just a couple questions in the chat that we've gotten a lot through the rapid response team. I know the answer to one of them. I don't know the answer to the other one. So I'll take the first one, and Ben and Ethan, I'll kick it over to you. So one question is somebody asked, you know, I've applied for an EIDL. Can I also do a PPP? And I think, Ben, you mentioned this earlier, but just want to make sure we're really clear on this. The answer is yes. Early on, there was some mixed messaging from SBA, and it looked like it would be an either-or process. You could either do an EIDL or a PPP. They later clarified that. And so you can apply for both an EIDL and a PPP. The one important thing to note in that is that when it comes to the loan forgiveness amount, the amount you can be forgiven with the PPP, you can't apply for your EIDL to use it for the same thing, if that makes sense. So the PPP, you want to focus in on payroll, rent, utility, mortgage interest, because that's what you can be forgiven for. The EIDL is much more broad than that. And you can also get up to $2 million with an EIDL. And with an EIDL, you can use it to pay for anything that you would have been able to pay if COVID never happened. And so what you can do is you apply for the PPP, apply for the EIDL, you get the PPP, you use it what it's for, you plan on having that forgiven. The EIDL is not forgiven, but it's 3.75%. It's a good rate, good guarantees, deferral of payments and principal and interest for, I think, 6 months until the end of December, something like that. And that's a way to get some additional cash at pretty low cost to help you through this challenge. The second question is, lots of people have asked today, and we've had it in other forums and in the rapid response team. They've applied to their lender, they're getting impatient, and they're wondering, should they go ahead and start applying through other lenders to see who can get it quickest, or do they sit tight? And at a certain point, I think you would probably want to find somebody else. But, Ben and Ethan, if you could talk a little bit about that. How does somebody know whether or not their lender is not going to come through for them for whatever reason, and therefore they should look elsewhere, versus sticking with their lender and being patient as lenders process thousands of these applications?
It's a really great question, and it's a tough one to answer. So let me give you a little bit of the landscape there. If I was advising my brother, a small business owner, on what to do, I would say, I would call my bank and say, are you funding these PPP loans directly? There are a lot of banks that are saying to their customers, yeah, sure, you can come apply for a PPP loan, and they have a link to it, and they are referring those leads or those applications to some other lender. They're not doing it internally. They're able to say to their customers, and it's in many cases it's not because they don't want to fund them internally. If they are not an SBA licensed bank, which most of the FDIC banks have been able to get on, since this program launched, but they may not be able to. They may not have the balance sheet or the back end liquidity to be able to fund the volume of applications that they're getting. Referring specifically to small local banks. So if I was banking with a small local bank that said, yes, we are SBA licensed, we can fund these, I would want to ask my banker, are you funding them directly? And they should know the answer to that. If they say no, then I would apply. I would keep my application there. But again, as we said at the beginning, there's no harm in having multiple applications out, other than the caveat being that obviously does clog some top of funnel processes for banks and could, for the broader program. But I would definitely have an application out, at least into my bank. And if they said, hey, we're not funding these directly, but we are, working to find a resource to get you funded, or we have an option that will hopefully fund these, I would still apply to another bank. I also, people are welcome to apply on Lendio.com, but it's a tough thing to say, because there are a big chunk of banks that are either, in some cases unwilling, in many cases unable to lend, and it would be difficult for a lot of small business owners to know exactly where their bank stands in that spectrum. A related question that somebody just asked about, an article in Wall Street Journal about fintech companies. So financial technology companies like Lendio is one of them, and a lot of the lenders on Lendio's platform are often referred to as fintech lenders. Lendio is not a lender, to be clear. We're just a marketplace, but we have fintech lenders on our platform. And somebody asked, is it true that they only were allowed to come to the party late in the process? And that is the case. So before the program was launched, Secretary Mnuchin was speaking in many formats and said fintech lenders will be able to participate in this. And that was great news for us, not just because we have a lot of relationship with those fintech lenders and we knew we could help small business owners through those lenders, but mainly because fintech lenders are actually built to do this kind of lending. Large volumes of small loans. They do better in most cases than banks do. And so we were excited to get them involved in the program because we knew it could provide access to a lot more small business owners. The very first fintech lenders that got licensed and approved to be able to participate in this was last Friday, a week after the program launched, when the majority of the funds had already been allocated. And that was just, I think there were two or three on Friday.
There were two, yeah. I think there were two on Friday and then another one on Monday. Yesterday we found out about 4 others, but
By yesterday it was obviously
the approval came in much too late for them to really be able to help out the businesses.
So that was a bummer that we were disappointed in that. I think it would be a good idea to apply to those fintech lenders as well. I'm hoping that when the next round of funding is allocated for this, that they will be able to help churn through a lot of, especially the smaller ones. So if you look at the average loan size for the first 350 billion, when the SBA released the number saying, here's how many loans we did out of the 350 billion, Lendio's average loan size that we've helped small business owners get for the 3.5 or 4 billion or so that we've helped them get is much, much smaller than the average, because again, we kind of targeted that underserved population. Those are the merchants that fintech companies will be able to help. So I would say, yes, apply to your bank. Certainly it's okay to apply to another bank. Certainly it's also okay to apply to one of the fintech lenders. If you apply to Lendio, we'll get you in front of as many of those as we can as well.
Yeah, that's great. Thank you, Ben, for that context. And it's tough. It's a balancing act, but having that context and that perspective, especially from where you sit in Lendio, working with all these different lenders, is very valuable. So we are out of time. I know that we have many, many more questions that we haven't had a chance to answer yet. And as I look at the chat right now, the last question tees me up perfectly to wrap this up. The last question is, where do I go or contact for help? Wait, sorry, I can't even read from that. Where do I go to get more one-on-one help with PPP and EIDL? And that's exactly what I want to remind everybody. Go to coronavirus.utah.gov/business. On there, there's a lot of information, and there's a link there to request assistance from our rapid response team. Again, for those who may have joined late, that is a team of 50 plus volunteers who are who've become experts on these topics, and their charge is not just to pass along information but to provide solutions and to solve problems. And so they'll follow up by phone, email, text, help walk you through the process. They aren't, this isn't their full-time job. They're not the end-all be-all. So still work with, the banks and your lenders and an accountant and everything else. But they can help track down answers to your questions and get you what you need. So Ben and Ethan, thank you again for being with us and for everything that you're doing and Lendio is doing to help so many companies. We hope that you get a little more sleep and a little more rest and maybe see your family at least once in the next few days. But what you're doing is important. It's essential, and the success that we have in helping companies participate in these programs is going to help companies stay in business, keep people on payroll, keep the lights on, so that when we come through the tail end of this and we begin to reactivate the economy, we'll be able to bounce back much quicker. And here in Utah, we've had tremendous success in this regard, and it gives me a lot of optimism and hope for what's to come over the coming weeks and months. And a final reminder for everybody, this is the 12th or 13th installment in the World Trade Center Utah webinar series. If you go to our website, you can see links on topics from tax issues to family leave and sick leave during this time, as well as more information on PPP, other federal resources. We did webinars on, with experts in China, another one with experts in India. And it's a tremendous resource there. You can go back and rewatch those. And please reach out and contact us if there's anything else that we can do to be of assistance. And finally, Hannah asked me to remind you, you will get an email from Hannah shortly after this with a survey with a link to this webinar. And you'll also receive some additional information about the other services that World Trade Center Utah provides for free. And we want to make sure that we are plugging in and supporting the good work that you're doing. So with that, Ben and Ethan, thank you. Thank you, everybody, for joining us. And I hope you all have a great day. Bye-bye.
Thanks.
Thanks.